Hi, this is Kerry Artak with Wicked Stocks bringing you your daily Tesla report for Wednesday, July 3rd, 2024. But before we check out the charts, I just want to ask you to please click like, share, subscribe, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the daily Tesla and daily NVIDIA reports, daily analysis in the SPY, daily analysis in the Triple Q, weekly analysis in the S&P 500 index, the NASDAQ 100 index, and Apple stock, as well as 2 individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor, always looking for 20% moves or more on those underlying stocks. And you get to see all of this for free. We offer a 5-day free trial up front. So check out wickedstocks.com. Let's take a look at the charts. I will start with this one. This is an updated weekly bar chart. We certainly pushed through, actually gapped above decisively on Tuesday, above the 209.96 descending channel top in the weekly chart. Assuming we close Friday above it, and I think it's pretty safe to assume, we should now, over the next 3 to 5 months, continue north to 326.49. This will remain a 3 to 5 month upside objective. On the way up, we have a rising channel top at 235.65. That is on the weekly chart, and the same exact number today, Friday, on the daily chart as well, 235.65. In reach perhaps today, given a presently bullish momentum and volatility. And that is backed up by 237.98, as you can see up here in the upper right, 237.98. Now, this is the daily chart, is a 5/8 upside Fibonacci level, the significant Fibonacci from the July high of last year against the more recent April low. This area is a range narrowing over the next few days and then expanding again into later next week. So we'll continue to show it as a range of resistance so long as it's roughly 2 points apart as it is right now, maybe a little bit more than that, but it will be narrowing as we continue into Friday and then Monday, and then it opens up again later next week. And so this is our zone. I also like it, because of, how I like the 1% violation thresholds, and that 1% violation threshold is shown here on the weekly chart. I normally reserve those actually for 6-month line studies. But, this one goes back to April. It's several months in the making. And I guess I'm just saying that 237.98 is consistent with the 1% violation, roughly speaking. It is a range of resistance, 235.65 to 237.98, that I'd mentioned as at one point kind of a 1 to 2 week, 2 to 3 week objective with a settlement above 209.42. Now on Monday, we closed right at this channel top 209.42, and then the deliveries data that came out on Tuesday obviously gap higher and continue to pull away. That 227.48 level, you can see how it intersects these highs and lows, but it is kind of an ABCD wave element. And there was some play there early, if you recall, on Tuesday, but we certainly pushed through, closed above it. I have it as an intraday support level. And, it is in reach below 235.65, and inversely, 235.65 remains in reach today above 227.48. So day traders can buy 227.48 in anticipation of 235.65. Day traders can short sell or at least long liquidate 235.65. I think if you're an aggressive 1 to 2 week swing trader, you may short sell perhaps 235.65 to 37.98. But I see that right now, most recently, as a counter trend move. So be careful. But you might see, following a test of the 235.65 formation, the market fall back over the next week or two, back down to 209.42. That is a real possibility. I'd mentioned how, the 326.49 formation is a 3 to 5 month objective. And on the way up, this 235.65 can contain weekly buying pressures, possibly through next week, and we can fall back into the 209 handle within a week or two of testing 235.65. So we could trade inside of this area actually for a few weeks. It could take a week or two to fall back to 209.42, and it could take 2 or 3 weeks to rally back up to the 235.65 formation. That actually already puts us into the month of August. So if we were then to close above 235.65, and yes, also above 237.98, then I think we've got about 3 months So that 3 to 5 months, the 5 months element allows for this market to trade inside of this kind of widening zone between 209.42 and 235.65 as we move through the rest of July, and closing above the 235.65 to 37.98 area. I think within 3 months or so, we should see 326.89. I do think you can prepare for 326.49 anyway. No good reason to be short Tesla at this point in time, unless it's a near-term trade, a near-term short sell, for instance, in this 235.65 to 237.98 region. But if we close today, let's talk about the possibility for a high volatility move. I don't see it happening today. I think this area is going to give the market trouble. But if we do push through or gap above 237.98, 247 even in reach, and if we close today above 237.98, once again, our 3 to 5 month objective at 326.49 is likely to be realized inside of about 3 months or so. Walking a downside once again, breaking or opening below 227.48 will keep 219.05 in reach today. And 219.05 is a 50% retracement level from the July 23 high against that April low. So it can contain session weakness. I can't remember. We opened just below this on Tuesday, but we pushed through it almost immediately, and then pushed through 227.48. So, but 219.05 can contain session weakness. It is in reach today if we break, especially if we open below 227.48, 219.05 in reach. So that's another day trade scenario to the downside. Breaking or opening below 227.48 will allow 219.05, where if you're short, you can certainly rein in the short position, take profits at 219.05, and you can have a go at buying 219.05 as a day trade. Certainly may contain daily selling pressures. If we close today below 219.05, we revisit Friday 209.42. That is the same channel top on the daily chart that we find on the weekly chart at 209.96. And, if that were to happen, if we were to fall all the way back into this area Friday, then it'll be a big test. Will we close the weekly chart 212.06 or higher, 1% above this 1-year channel top? And if the answer is yes, and I think it likely will be, we anticipate 326.49 over the next 3 to 5 months. If we fall back and close below the 209.96 level by Friday's close, well, then I'm expecting 176 pretty quickly within 1 to 3 weeks. And that kind of failure would allow a longer-term bearish continuation as we move through the rest of the third quarter. We'll cover that closely, of course, but right now it looks good. The trend has shifted from being in a pretty well-defined 1-year bear trend that is now completely neutralized, and we should see within 6 months or less, possibly within 3 months following a settlement of 235.65, the 326.49 channel top, that by that point in time may well contain buying through the rest of the year. I'm going to leave it at that. I think I've said enough for Wednesday's Tesla. We're off Thursday, of course, for the 4th of July. Happy 4th. We'll be back probably either Wednesday afternoon or Thursday morning with Friday's Tesla report. We will be providing now an analysis for Friday's Tesla. You have a great 4th. I will talk to you soon.